Saturday, March 28th, 2:03 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. We're near finishing the end of this month. That'd be the end of the first quarter of the year. Yep, next week, a few more days left for the month. And then we start the second quarter of the year and companies start releasing their earnings. Going to go over the major stock indexes, give you some insight about the major stock indexes, U.S. economy. It's a democracy. Not all democracies are the same. The United States democracy runs on consumption, consumer spending. As we're heading towards recession, I said the word recession, things have been getting worse the past few weeks, the past few months, before the war started. We're grinding towards recession. We're not there yet, and maybe we won't get there. The point is, when you start going in that direction of momentum, things rapidly change. Consumption, consumer spending cuts back. Let me tell you who gets hurt or who gets dinged, where the money stops faster. Home Depot, Lowe's. A lot of discretionary buying at those places will dry up. They have a big footprint in the United States. So I'm giving those as real-time examples. The other two are Starbucks, DoorDash. A lot of discretionary money goes to those. That money spent there be cut back. Many communities have people that work side hustles or full-time in those positions as well too. As well as entertainment. People might cut back on subscriptions or going out to restaurants, cruise ships, airlines, the entertainment value. If the income of those places dry up, or if there's less foot present, they want to save money to cut back on labor. A lot of people in the United States are not eligible for unemployment because they're not full-time nor meet the requirements of full-time. The unemployment numbers are skewed. Many people have 2 jobs or 3 jobs. Again, because a lot of employees don't want to pay them full-time to give them benefits. It's a savings for the company. Again, the unemployment numbers are skewed. Yeah. Not all democracies operated like that. So that being said, we'll look at multiple time frames, daily, the left, the middle of the week, and the right, the monthly, on the major stock indexes. First one, the S&P 500, the go-to stock index. Financial institutions want to either outperform or perform at least equal. On the far right, the monthly will be done next week. Look at that big red candle. New low for the year. Big retracement. That's extreme bearish. The middle chart, the weekly. On that middle chart, the weekly, the last 2 red candles, huge trading range. From the price range, from the top to the bottom, extremely wide. And we closed deeply in the bottom of each of those candles. Again, the selling, the panic has increased, stepped up the past 2 weeks. All red, lower highs, lower lows. On the daily chart, Friday, we gapped down. We never filled the gap, the new low for the year. Now, the S&P 500 is a very diversified index. It's got several stock indexes in there. And remember, the S&P 500 is comprised of 11 sectors. Let's go on to the next. The NASDAQ 100. NASDAQ 100 is part of the S&P 500. The 2 major stock indexes, the S&P 500 and the NASDAQ 100. Far right, look at that big bearish candle. The middle, big bearish candle. bigger trading range than that prior red candle in the prior week, even worse shape. I have a gap down here that has not even been tested yet. This zone, key level, those two red candles, consolidation, huge impulse move up. Yep. So that's why I continue having this labeled. I'm going to actually extend this out. And I'm going to label it green. It's a potential sweet spot. I would be watching for a bullish trade. Time will tell. And just because it tested it in the future doesn't mean it's solid for me to want to do investment. And the far left, the daily, same thing. Look at this, a gap down. That's how bearish it was. Never got the gap filled. Okay, let's go on to the third stock index. One of the oldest, Dow Jones Industrial Average. Again, very diversified index, but only 30 companies. Monthly, look at that big bearish candle. Weekly, yep. We are now, new low for the year, but we are now testing. See this green area? A key level. I'm going to open this up, go back, go 5 years. 5 years on the weekly. There we go. Zoom in some more. So all the way back here, 2024, we did a reversal. And then here, 2025, we did a retest. And when we did a retest, it was markdown distribution. Smart money was selling. The market dumped. Took many months, get back up there. Consolidation for many weeks. Finally did a breakout. So again, strong area. It was the selling here. Resistance. Broke above it, making it the floor. So we are at the floor now. Want to see how this works out. And daily, new low for the year. Give you some more insight situation. Yesterday, after the market closed Friday, as well as today, many media outlets, some are business, some are just regular networks, radio, TV, internet, podcasts. Not a single one of them, big media companies, small media companies, not a single one of them showed nor said what I just told you. New lows for the year for those three major indexes. What they did say is the percentage or dollar amount that the market's dropped. So if you don't look at charts or know what the 52-week high or low is year to date, you're not aware we're at the lows of the year. Professional, what they call themselves, professional media outlets, hosts, producers, failed to communicate effectively in a country that has more free press than other countries. That is dangerous to be in this society and dependent on that information. So good job out of you being here, getting my insight by me sharing you documentation, solid numbers. This is the Dow Transports, 20 companies. So look at the red candle for the month. Yes, lower high, lower low. We didn't break a low of the year. Saturday is a wick down there showing buyers stepping in. This also is part of the S&P 500. And look at the weekly chart. Inside candle. We broke above it. Higher high, higher low. We closed back inside the yellow candle. That's concerning. Yeah. So this imbalance area I have labeled here. We may not make it straight up there. That's not going to be good. Nope. And the daily chart. Again, Friday, red candle. We broke below and closed below that inside candle. That's how bad things are. The continuation, even the transport's not working out. Now we'll go to the Dow Utilities, which is also part of the S&P 500. Dow Utilities, companies that pay high dividends. People typically invest in these utility companies or companies that pay high dividends when they want to earn income because there's limited growth due to the geopolitical situation. And that's what's happening. You already saw the major stock markets. They're in decline. People are not earning income. Nope. On those, some of them might cut back on dividends. Well, they may be earning income if they're doing good option strategies. But again, the Dow Utilities, look at the monthly, all-time new high. Took out the high of last month. Did a big retracement of that green candle. That's the month of February. So this big red candle, again, new high, deep retracement, big wick, deep retracement, big green candle, which is healthy. Now, big wick on the bottom, buyers stepping in here. Nice. But who wants to invest in the utilities? And for the week, inside candle, inverse, hollow candle, equivalent to a green candle. We did also close inside that red candle, but we closed below midpoint of that big red candle, looks like. Yep. So this is concerning. Down here, we might go down here. Key level. I think I'll actually label that too. That's a strong, bullish candlestick pattern there. Yeah, I'll definitely label that. Patience. Now, the daily chart. Yep, you see, again, zoom back out. We have gaps that have not been filled here. Big red candle sell-off, natural retracement on weakness. Look at these big wicks on the top. Yeah, not enough confidence for people to keep holding it at the high. Nope, every time they ran up there, sold off. And this big bearish candle here, bearish pin bar. So even the Dow Utilities, even though a new high for the year, it's looking like it's ugly. It's getting bad. It is getting bad. We'll finish this off looking at that one more stock index. The Russell 2000, small caps. Higher interest rates, they get affected the first. They take the biggest hit when yields are higher, and the yields have been going higher. Monthly chart, new low for the year. Weekly chart, big bearish pin bar. Not healthy. Nope. Which is interesting. Here's the prior week that made the low of the year. It made an attempt to take out the high last week, and it failed really bad here. And daily chart, the gap down. So that's the current situation. The stock indexes, again, the S&P 500 has 11 sectors, very diversified. I'm not doing dollar cost average. I am not invested in these stock indexes. Dollar cost average for me, better investments are the stronger ones in the sectors. I have videos on that. Very good insight on the sectors, being situation aware. You could outperform these stock indexes every year. Stay on top of money management of the leadership of the sectors. Thank you as always. Spend just a little time with me. That's it for the video. Thanks for watching.